Crypto, digital assets of the future.
Hello and a very warm welcome to CNBC TV 18 and WazirX present Crypto, the digital assets of the future. While we do understand and has been reported in various news reports that nearly 10 million crypto investors are in India as per 2021 data. While there is no clear indications from RBI or from the income tax authorities, but we do understand that if you are making an income out of cryptocurrencies, then you have to pay income tax here. So even as we await the regulatory clarity on this one, how are people dealing with it and how do you side by the law is the kind of understanding we will have from our guest. Amit Gupta is MD SAG Infotech and he joins us on the show. Amit, hi, thank you so much for your time. So we do understand there's a lot of people who are investing in cryptocurrencies, who have made it their passive business as well. There also is a bit of a FOMO, that is fear of missing out, that has led to a lot of people investing in cryptocurrencies. And with the kind of volatile moves that we have in this space, there are people who made losses, but there are people who made a lot of profits as well. What is your sense, first of all, on how this income should be treated?
There is no such norm by the CBDT how it will be taxable in India. So, as per general perception, that if any person working doing that cryptocurrency in regular way, in trading, just selling and purchasing in regular intervals, then it can be treated as a business income and taxable as a business head income. Or if any person invests that money into the investment purpose or so some long-term vision, so that will be chargeable as a capital gain head income, in which if he holds the currency for 3 years and more, then it will be chargeable as a long-term capital gain, or less than 3 years, then it will be chargeable as short-term capital gain. So in any case, the investment purpose, the money was incurred or regular or for long term, then it will be treat the income, it will be treat as a business income or capital gain income.
So Amit, we do understand that when you are buying a cryptocurrency or holding it, you don't have to pay any taxes on that. It is only when you sell cryptocurrency and you earn profit out of that. Do explain to us also on how do you look at various ways of trading into cryptocurrency. I could be a frequent trader. I could also be an investor, or I would want to take a look at it as a business for myself. Does my tax implication also change accordingly?
Yes. As per your working, if you are trading that cryptocurrency, then you have to treat this income as a business income. And in case of if you are buying the cryptocurrency, then there is no taxation on the buying. When you will sell, then it will be chargeable. Then the tax liability will be occurred. And one thing which is very important, that if the payment is directly done out of India, then maybe there is a possibility that you have to pay TDS also to the Indian government, because as per section 195, if there is any payment made to outside India, then you have to deduct the TDS, at least 20% of rate. So it is very important thing that everybody should remember this thing. If they are doing with outside India exchange, then they have to there is a liability to deduct the TDS also. If they are doing these transactions with Indian exchange, then there is no any TDS liability will be occurred on the purchaser. On the other side, if anyone invested the money for long term, but there is no frequent transaction on this cryptocurrency, then it can be treated as a long capital gain, or it will be capital gain will be decided on the tenure of the holdings. If it will hold more than 3 years, then it will chargeable as a capital gain at the rate of 20%. and if it's sold within 3 years, then it will be chargeable as a short-term capital gain, and the tax will be as per slab applicable.
Amit, just for the clarity of viewers, yet again, if you could tell us on how it is a capital gain when it is being invested, and and when do you look at it is in sense of business income? How would you separate the two?
If anybody wants, he has a good money for that, he want to trade this currency, because the variation is very large. Nowadays, you just check that currency has a very whenever it's high and sometimes it's low. So it is much better that a person should have invest in cryptocurrency for long-term period, so they can gain the money. If anybody can trade this cryptocurrency, then it required so much of money to buy and sell that cryptocurrency. So much better that in small amount, some people has invest money whenever the price is decreasing trend, so it will after 4 to 5 years they can earn very good return.
You've explained us on how it can be treated as a business income, or you can pay taxes as a capital income, capital tax gains onto this one. There are a couple of other ways as well, Amit, and do explain that to us. One way of looking at it is income from other sources, and yet another is income from or a speculative income in that sense. So when can this be treated in that way also? If yes, then what are the liabilities here?
Right now, CBDT has not notified anything in this regard, because the currency is not a capital asset. So maybe in future, CBDT can treat as a business income or other sources income, depend upon the transaction volumes. If it's frequently, then it can be treated as a business income. Otherwise, it can be created as a other sources income. In both the difference in this case is in business income you can claim the expenditure, but in case of other sources income we cannot claim any amount of expenditure. Due to there is no explanation given by the government in this regard. So as per me, business income and capital gain is much better option to carry on these transactions, because other sources income not a criteria that you can presume that this is a other sources income. Government has not notified us anything in this regard. So as per transaction done by, because the crypto transaction is done on exchange basis, or exchange basis may be possibility too for business income and capital gain income only, not for other sources. Because once you are doing any transaction of shares, securities, all are done on the through stock exchange. So then stock exchange is income in shares. It's in regular way, then it's treated as a business. Otherwise, it's treated as investment income. So I think so that there is less possibility to treat as a other sources income.
Amit, there were various reports in the recent few months, especially when the cryptocurrency prices were trading at an all-time highs, on how the IT department had sent notices to people who had made profit from these cryptocurrencies. So what to be just to be very sure, to be on the safer side, if there are people who are trading, people who are selling cryptocurrencies for profit, what is the first thing that they should be talking to their CA, or how should they be filing their taxes? What is the step-by-step way of doing this?
Once any people are doing this crypto transaction, then he has to told his CA about when he has purchased, when he has sold, what amount he has purchased, and for what amount he has sold. Because there are exchanges in India also, and there is a transaction. Many people are doing these transactions outside India. without using the Indian network or Indian exchange. So it is both things are very different. In that case, if anybody is purchasing or selling cryptocurrency, then he has to first take the consultancy with his consultant, so the proper taxation will be taken from account. How many cryptocurrency he has purchased, for what amount, what is the rate of conversion for at that time, what time when he has purchased or sold, what is the rate of the currency, such he has purchased into dollar, then what is the conversion rate at that time, the dollar, because all will materialize that he has paid in dollars, then the taxation will be different in that case. So it is importantly that he is purchasing and buying, then he should first take care that payment, what is the payment mode, to whom he is paying. So if there is any liability of TDS, then he has to direct the TDS if the payment done outside India directly, or if there is a exchange involved, then there is no problem. After that, he has to consult if there is a frequently transaction, then he has to decide that there is a advanced tax liability. So he has to when he is started, the person has started, he has to consult with his consultant. Then after that, he has to proceed, because when he is gaining income or loss income, then there is many things which the person has to take care. Advance tax to be paid. If there is any loss, then how it is to be treated. If there is any foreign purchase in foreign currency purchase, then there has to changes in the capital gain schema, how it will be treated. So majorly first he has to consider that he has to acknowledge with his consultant all the things, so in future there is no problem will occur. Otherwise, IT has many things that they have getting all the things in the from the foreign transaction, and RBI also involved in that, how they are transfer the fund and getting the fund from foreign currency. So there is some compliances from the RBI side also.
And we've been talking to exchanges also. They tell us that there are regular ticket size basically is 10,000 rupees to perhaps a lakh of rupees is how people are investing in cryptocurrencies. So something as low as 10,000 rupees, where you might be looking at a profit of 2,000 or 3,000 rupees. How do you put that in your tax schedule? How do you pay taxes on that amount?
For a small investor, there is no problem, because it's a very less amount. If a small person is saving something in that using the exchange, so I think there is no problem in that case. If the profit is not more than 2,50,000, then there is a capping. There no taxation on that. And if there is a slab of 10 to 20%, then also there is no problem, because when problem occurs when there is a high value transactions. Otherwise, if you are doing the Indian exchange and doing very lesser amount but frequently, then it will again chargeable as a business head income, not capital gain. So for 2,000, 3,000, I think there is no problem. In a up to the limit of exempted income, there is no problem, because the quantum and the value both are very lesser. But in case of you are purchasing 4, 5 Bitcoin, 3 Bitcoin, 10 Bitcoins, purchasing, selling, then there is a difficulties that you will be in the eye of the RBI and income tax. In that case, it's a very typical that you can get the notice from both the departments.
All right, that's a lot of clarity, Amit, and thank you so much for that. But with that, we'll go for a very short break. This is all about cryptocurrency. When you are trading them, the kind of amount you're putting in, the kind of profit that you're making, and how tax liable all of that is. But after this break, we'll talk about the mining side of it. If you're mining a cryptocurrency, then what are the tax liabilities there? We'll get you clarity on that one.
WazirX and CNBC TV 18 present Crypto, Digital Assets of the Future.
Welcome back, and you're watching our special series where we're talking about taxation implications in case of cryptocurrencies. We've spoken about that part already. We will talk mining. It's not just about generating a cryptocurrency. It also is about getting those assets, those resources, all of that in place as well. So my question, Amit, is that if somebody wanted to start mining in India, and I'm assuming there are some miners in India, what kind of capital investment goes into that? Even if we don't have a fair number here, but since it is capital intensive, are there any deductions in taxes that these miners can get?
Right now, there is no government support in that area, while RBI allowed ki you can trade in cryptocurrency, but if it all depend upon the quantum, ki how bigger you want to do the work. If you initially start with the 8 to 10 computer, then maybe there is a 20-25 lakh rupees required. But if you are creating that you want to go for a big, then it created in a $millions will required to invest, because there is a high big space and the computer specifications should be very good, power backup, UPS, and all the things, good light connection, generator backup, and AC plant, central AC. So all the things it required, so it will create a huge amount investment. It cannot say depend upon the how many computers, how many currency you want to create. It depend upon the that requirement, how much you will be invest. Many people are doing 2 or 3 computer, 10 computer, 50 computer, and generating the cryptocurrency. But in that case, maybe 50 lakh, 70 lakh rupees, 1 lakh, 1 CR rupees is required. But if you go for a big, then it required $millions.
So your point really is that it all depends upon the quantum on what your investment is, and your tax implications or the liability will come accordingly. So let's also assume that a Bitcoin has been, or rather a cryptocurrency has been mined with the kind of cost or with the kind of, the value to cryptocurrency is right now. Are there any tax implications at that too?
Regarding tax implication, there is nothing said by the CBT or any other authority of India. But in case if you are selling cryptocurrency, then definitely the tax liability will be occurred. And other one is key that in case of deductions, so once you are operating any organization, you can claim all the expenditure. There is no problem in that case. You can get the GST credit, you can pay the salary, all the deduction will be allowed. So it's not a problem to claim any expenditure which the company has incurred to generate the cryptocurrency. And on taxation part, they have to pay the taxes as per the government rules which are applicable, because there is no specific rule specified by the government. So you have to pay the taxes just as GST or income tax. That liability will be you have to bear.
Not long back, the ministry had said, Amit, that the listed companies, if they were holding cryptocurrencies on their balance sheet, they had to then tell it in their annual reports. I mean, that is something that the ministry already has told the companies. But for various other people, various other investors, small and big, is there any law like that as of now? Or as you earlier said, that if it was in small quantities, then it perhaps can be looked over?
Ministry has notified that you have to disclose this cryptocurrency in your balance sheet, and maybe there is in sometimes in ITR form they have required you have to disclose all the things because they want to know how much amount people have invested in that cryptocurrency because they want to close watch. That amount goes to the cryptocurrency which cannot be used for this threatening purpose. Majorly cryptocurrency is using for usually have to pay some bribe or some hackers majorly. So government want that you have to they have knowledge about that they have invested that amount and what is the purpose of the amount. This is the investment, or maybe there is some other reason they have get this money and not disclose in their financial statements. So maybe in future they have required in ITR form also, because lower investor not mentioned that they are not doing the business, so he has not prepare his balance sheet. Only businessman who is doing the business is prepared the balance sheet. So ITR is much better option that government ask you have to put the investment amount or the holding of cryptocurrency so that they can know people how much amount are investing in that currency.
Point taken, Amit. So there's a lot of ifs and buts, as you've told us. But to be on the safer side of the law, this is best that you do pay your taxes, that you do disclose on what kind of cryptocurrencies are you holding and how much profits have you made out of that. Clearly, there's a lot of opportunity that people see in sense of cryptocurrencies and the kind of return that they've made for so many people in India and abroad. But how you hold it, how you pay your taxes, how much are you investing in it are some of the things that, remember, the authorities are keeping an eye on. Amit, thank you so much for joining us and explaining all of that to our viewers. Thank you so much.
WazirX and CNBC TV 18 present Crypto, Digital Assets of the Future. Focus, ideate, innovate, enable.